Welcome to a capital hungry breakdown on gold, otherwise known as XAUUSD. We're going to be going from the higher time frames to the intraday time frames, looking for some potential trade ideas, but of course, doing some macro analysis, understanding some of the fundamentals that are impacting gold. And especially as we are starting a new quarterly and monthly period, it is always good to do some higher time frame analysis. So we are just using a different broker feed right now for the view, as we already have our key levels mapped out on gold from like the 1400s all the way to the 2000 points, of course, using the candle body conjunction points on the higher time frame. So we're just going to be looking at market structure, price action, buyer seller strength, and what we can potentially start to forecast when we are taking a look at gold here, and then moving down the time frames to map out some potential trade ideas with that information. So when I was just looking at the quarterly chart here, of course, we are only 3 days into this 3 month candle as well as the new monthly candle. You can already see we have created a bit of a top wick as we went to retest exactly at that same wick point from previous all-time highs on gold around 1920. Now, what I was just highlighting is that, of course, gold is extremely bullish, but we have peaked new all-time highs when market fear was extremely strong as COVID-19 hit the markets and hit the world. We have had a very strong impulsive buyers push for the last extended period of time since early 2019. And we have broken out of this consolidation area where we were getting some correction in order flow generated for that overall upside move when economies were more stagnant and economies were more um, not facing as much economic turmoil. There wasn't these mass trade wars going on or anything alongside of COVID-19 or anything like that. But of course, now what I just wanted to take a look at is that we have had a very strong extension to the upside on gold. And on an intraday perspective, we do have the US dollar to potentially give us some more bullish momentum. And I am just thinking about the inverse correlation while looking at this quarterly and monthly candle, which has yet to create any significant top wick yet. Also, after gold has done extensions to all-time highs before, and I will show this on the monthly, we do start to enter a bit of a higher time frame range where more order flow and liquidity is generated for the next potential impulsive move to the upside or a corrective move to the downside, depending on the market fundamentals at play during that time. Okay. But what I was taking a look at is pretty much from this consolidation period where we had a lot of order flow and liquidity generated in the market and a base created for gold on the higher time frame. We had about a $700 impulsive move to the upside on the price per ounce of gold. From that peak point, looking at about a 50% correction of that impulsive move, very similar to here, say about 1400. 700 or 800 down. Very similar idea here. Very strong impulsive move from a previous consolidation area to the left here. You could even just drag it down a bit, and it's about 15 to 1600 here. And then about a $760 correction per ounce, which is about a 50% correction of the overall impulsive move before another buy area was created on the higher time frames, and then an extension up the upside even further. Okay. So I'm seeing something similar happening now where we have peaked highs, new all-time highs on gold. Market fear currently is not as strong as it was when pandemic markets first hit the scene. This quarterly candle has yet to create a significant lower wick. It's very minute and has already grabbed liquidity at the exact same price pretty much as previous all-time highs. And we do have potential from this impulsive move to the upside, which is about $750 per ounce to get a 50% correction of that upside move, which would bring us to around testing this previous all-time high and previous price sensitivity area, right? So we come down to like about here, start to consolidate, generate order flow. use the previous price sensitivity area on, on the higher time frame as buy entry points. And from a swing perspective, if we get that base and support created by buyers and US dollar strength is waved off and there's more market fear, then we would have an extended buy to the upside to fill this wick range and order range to the upside and test previous all-time highs, right? This is heavily also dependent on watching the US dollar very closely. So the US dollar now on the higher time frames is still very bearish, of course, right? The US dollar is still very bearish. It's been heavily oversupplied by Federal Reserve printing, and demand has slowly been decreasing for the US dollar worldwide. But we have had some recent cap bounces that have been correcting some of that downside move, but not breaking higher time frame bearish market structure. But if if the US dollar can hold some intraday bullish structure and go to retest these highs at 94.7 and potentially break higher to new intraday highs, that would show me stronger potential for not this massive correction down to 1690, 1700, but at least higher probability of this new 3-month candle and the new monthly candle for the month of October to create a deeper lower wick and come test this previous price sensitivity area as we start watching the ranges. Okay. So now, again, when we're looking at the monthly, we are starting to get similar historical price action signs of when previous all-time highs were hit on gold, right? We had this massive extension, a new all-time high was hit. You had price play in this strong higher time frame range for an extended period of time. And then when the US dollar was starting to pick up strength and there was more support behind the US economy and faith in global economy, gold lost its safe haven appeal and you had a deeper correction. But this deeper correction here still did not break macro higher time frame bulls on gold. This was just a correction of that overall impulsive upside move, a 50% correction point, order flow and liquidity being generated in a sideways market, you can call it, or a bit of an indecision, a bit of an indecisive market on the higher time frames for an extended period of years. Even though you can play these ranges very well in an intraday perspective, when you're looking at the market structure, this is a period of consolidation and order flow being generated for the next impulsive move to the upside. Now, as we have peak new highs, we are getting similar historical repetition of rejection at new all-time highs and potential for price to come into a higher time frame macro range to test previous all-time highs in the 1700s. This is going to be dependent if the US dollar picks up strength. So when I'm looking at gold on the 3-month, when I'm looking at gold on the 1-month, yes, the higher time frames are extremely bullish, but there is very strong potential for correction, especially if the US dollar can hold intraday bullish structure or hold above 93.3, then pop back above 93.8 and go to retest previous intraday highs and peak into new intraday highs created by buyers to correct this downside move. You can see here to the left, that would give higher probability of a inverse play on gold to see some deeper correction to at least the 1800s. Okay. Right now, we can see price action is showing us some exhaustion at the highs by buyers and sellers jumping into the market. We're getting very strong bearish candle closes. This new monthly candle for October has already created quite a significant top wick and has very minimal lower wick. So on the intraday perspective, there probably is potential to start playing some sell side bias on gold if we notice the US dollar still holding some of that strength. Now, of course, global interest rates are still low, specifically US interest rates are still low. This does keep gold appealing higher time frame on a macro perspective, and we do have the potential for another round of lockdowns and pandemic markets, okay? Trump is catching coronavirus. All these US politicians are catching coronavirus. The UK is potentially going into a tier 3 lockdown, right? So we do have the potential for a return of pandemic markets that can leave economies stagnant, meaning meaning central banks will have to jump in with more stimulus. This, of course, will increase the precious metal safe haven appeal of gold, physical gold, and gold spot hand in hand, right? So we have to keep in mind and watch that accordingly. But currently, I would prefer and like to see deeper correction on the higher time frames on gold, so we can also get better macro buys for swing potentials if those pandemic markets do come in. And just looking at inverse correlations, looking at the price action and exhaustion of sellers, and looking at, like, of course, the potential for US dollar to have some movement on the way up, we just have to anticipate on the intraday, once we start zooming in and we'll look at our key levels, that we can take some potential sell plays at a break of intraday bullish structure. And of course, we do have elections around the corner as well. So just looking at the price action on the weekly, of course, very bullish on the higher time frames, but looking at recent price action on the weekly time frame, the last few weeks, we can see strong exhaustion and impulsive bearish candle that engulfed the previous weekly candle, a consolidation phase, and a support created. That support was broken by another impulsive candle that corrected this full upside move, and then this next bullish upside candle has yet to break above that consolidation area and is using that price sensitivity area as potential sell points. Now we might be able to catch some sells here, or of course at the break of the lows or our key level below 1852. Then we're looking to see corrections down to the 1700s in this previous price sensitivity area, and that lower wick made on the quarterly candle and on the monthly candle to test better buy areas, higher time frame, and then see what type of move we make from there once we get about that $30, $35 drop to correct that $700 upside, 50% correction of that impulsive move. But also when we're looking at the weekly, if we fail to break those 1852 lows again, this would be higher risk buy areas, and only if the US dollar is showing us exhaustion. And of course, safer buy areas are becoming above this price sensitivity area around 1965. And you can ride those buys all the way back up to previous all-time highs from a macro perspective. We can, of course, find more refined entries when we're looking at our intraday charts, but looking at the quarterly for the potential to make that lower wick, looking at how we do have some bullish intraday structure on the US dollar, looking at that historical analysis of how gold has reacted at all-time highs previously, and it does start to range. Buyers do start to exhaust. You do start to get deeper corrections. And looking at the potential for the monthly lower wick, the weekly price action, we do have some potential for gold bears we can take advantage of. And this is why I like to do this analysis every once in a while, so you can zoom out, you can create some areas of interest and price points of interest from the higher time frames. You can look at the structure, you can validate the analysis down the time frames. And now, as we already have our key levels mapped out, we're just going to look at the intraday structure. So now, I was saying safer long-term buys would be above 1965. But of course, when we're looking at some of the intraday structure here, and where we have previous price sensitivity at this bit of an order block to the left here, where we reacted at our key level 1912, safer buys would of course be above 1912 to a full correction of the 1953 move. So right off the bat, we're going to highlight that the safer buy option for us would be above break and retest of previous intraday highs. Okay. And we would ride that up to at least a correction of this downside move. We'll say at least 1953. And this is the hourly chart. Of course, you can see we have had stronger impulsive bearish market structure. Even this is fairly weak intraday bullish market structure that we are potentially breaking as well. The reason I highlighted the structure, even though it's not a clean trend line, is because from this price point specifically is when Donald Trump got announced that he caught COVID, and we had that market fear enter the markets and increase gold safe haven appeal. So this was a significant price point that gold bounced off of and created some bullish structure and created a new, or at least tested previous intraday highs. So I really wanted to mark that out from the low point. So that is why I marked that out. And we can see that there is that potential if we come below this point on the intraday, the Trump COVID price, we're going to call it, that we can have a strong sell-off and correction right back down to the 1852 region. So I'm either looking at a pullback to retest this structure and sells from and sells from 1902 down to 1802 and or below 1883. Okay. So on the intraday, of course, very strong support respected at 1852, which started showing us sellers exhaustion as buyers jumped in, but we failed to break above this previous price sensitivity area and our key level at 1912, even with the market fear induced by the US president getting COVID-19, it was still not enough buyer order flow to break 1912. So just keep that in mind, okay? So safer buys, of course, would be if we came above that price point. Because if we have a clean break and retest above that price point while still failing to break previous intraday low points, that shows us that this liquidity is buyer side liquidity, and we have that potential for another impulsive extended move to the upside to create a new high by buyers, and we could take that above 1912. But currently, we're looking at the inverse correlation and the potential for the US dollar to bounce off intraday bullish market structure, as we do have the potential for the new monthly and the new monthly candle and the new quarterly candle to create more significant lower wicks and give us that historical repetition of correction. Right here, the monthly come down to like the 1850s at least to fill the wick, potentially deeper correction as well to the 1700s. So that is what I'm looking for. Of course, when we come down to the previous intraday lows that failed to break, we will have to watch reaction as we can get a bounce. But I am more in a sell bias when we're taking in some of that US dollar strength, when we're taking in that Trump's, even with that bullish influence from Trump getting COVID, it still was not enough to break previous intraday highs or our 1912 key level using historical price points on the higher time frames. It was still not enough to break that point. So we would need more mass market fear. Literally, we would need Trump dying from COVID or more US politicians getting COVID or that lockdown. With that lockdown, with the US dollar potential, even if there's a lockdown, the US dollar can still gain strength as a safe haven currency and gold can get strength. Like when we saw first pandemic markets and gold is going into the 1900s, right? But let me quickly label out the chart, but I am more in a sell bias for those reasons, from going to the higher time frames to the intraday time frames, looking at buyers and sellers strength, looking at the impact of some recent world events and how it impacted the markets and got waved off so far, looking at the structure, and like a pretty good analysis so far. But I'm just going to pause it, label the chart, and then we'll get into it. Okay, so you guys can see the screen here, just highlighting where the Trump COVID spike was, some intraday bullish market structure. If we get a potential retest of around 1902, 1897 and fail to break plus LTF confirms, this could be a nice higher risk sell area down below 1883, where we have the strong previous bounces off our key level. And of course, below our key level would be safer sells. Target ranges at least previous intraday lows. And of course, we can break lower if we have that US dollar strength continue and bounce off this intraday trend line or come above 93.8 and go to retest previous intraday highs or break higher, like as I already talked about. We want to watch, we want to keep an eye on global potential for global lockdowns and market fear. We want to keep an eye on COVID Trump and the spread of COVID globally as well. We do have the potential for that historical repetition and the other points I said down the line. Not too much data this week. We do have the FOMC meeting minutes on Wednesday, but we do have a lot of Fed and central bank speakers throughout the week. Other than that, not as heavy of a data week for the US. And of course, I will send market updates to if we have any changes in market sentiment, any changes with the fundamentals, any changes in structure. I will, of course, send market updates as well.